Every month, there's one report that has the power to shake Wall Street, guide the Federal Reserve, and even impact the decisions inside your own household. It's not the stock market. It's not inflation. It's not even GDP. It's the Non-Farm Payroll Report, often called the heartbeat of the U.S. labor market. For decades, this single report has been at the center of economic forecasting. Investors plan their trades around it. The Fed bases policy decisions on it, and news outlets report it with urgency the moment it drops. But here's the secret most people don't realize. This report isn't just about high-level economics. It's about everyday life, your mortgage rate, your paycheck, and even the price of groceries at the store. Welcome to the Report USA, your trusted source for U.S. financial and economic news. In today's video, we're going to break down what the Non-Farm Payroll Report actually is, why it matters so much to the U.S. economy and financial markets, and most importantly, why you, as an everyday American, should care about it. Stay tuned until the end, because I promise you'll walk away with a new perspective on how this one report connects Washington, Wall Street, and Main Street.
Our first topic is what is the Non-Farm Payroll Report? Let's start simple. The Non-Farm Payroll Report, often shortened to NFP, is released once a month by the Bureau of Labor Statistics, or BLS. It gives us a count of how many jobs were added or lost across the US economy during the previous month. But it's not every single job. It specifically excludes certain sectors, like farm workers, private household employees, and some non-profit workers. Why? Because those jobs are highly seasonal or inconsistent, and including them would distort the big picture. The NFP also includes other crucial data points like the unemployment rate, which tells us how many people are actively looking for work but can't find it, and average hourly earnings, which signal whether wages are rising, flat, or falling. To put it plainly, the NFP is like a monthly snapshot of the nation's workforce, showing not just how many jobs exist, but the quality of those jobs, and whether Americans are actually earning more money. And because it's released on the first Friday of every month, the NFP has become a highly anticipated event, almost like an economic holiday for analysts, traders, and policymakers.
Now, let's move on to our second topic. Why does NFP matters? Now, why do we care so much about this one report? The answer is simple. Jobs are the backbone of the economy. Every new job created means another person earning a paycheck. That paycheck turns into spending, whether it's on housing, food, travel, or savings. And that spending fuels businesses, which then creates more jobs. It's a cycle. Here's why the NFP is so powerful. For policymakers, the Federal Reserve looks at NFP to decide whether to raise or cut interest rates. If job growth is too strong, it might mean inflation is rising, and the Fed could step in to cool things down. If job growth is weak, it signals economic trouble, and the Fed might cut rates to encourage borrowing and hiring. For investors, Wall Street reacts instantly to NFP numbers. A strong jobs report can push stock markets higher because it signals growth. But sometimes, if the data looks too strong, investors may fear higher interest rates, and the markets could fall. For businesses, companies use NFP to gauge demand. If the labor market looks healthy, they feel confident to hire and expand. If not, they hold back. Think of the NFP as a report card for the US economy, graded once a month. And every sector, from government to banks to households, reads it carefully.
Let's move on to our third topic, impact on the US economy and markets. So, how exactly does this report ripple through the economy? On the Federal Reserve, when job numbers are hot, the Fed might raise interest rates to prevent the economy from overheating. That makes borrowing more expensive, but slows down inflation. On the other hand, weak job growth pushes the Fed to consider rate cuts, which lower borrowing costs and stimulate spending. On financial markets, the NFP can move billions of dollars in just minutes. Stocks, bonds, and currencies all react the moment the numbers are released at 8:30 a.m. Eastern Time. Stocks. Positive numbers usually push stocks higher, but if investors fear the Fed will raise rates too aggressively, the market can swing the other way. Bonds. Treasury yields often rise or fall dramatically right after the release as investors adjust expectations for interest rates. The dollar. A strong report strengthens the dollar, making US assets more attractive globally. A weak report often weakens the dollar, signaling slower growth. In short, the NFP isn't just a report. It's a spark that ignites the financial system once a month.
Now, let me tell you about today's fourth topic: why everyday Americans should care. Now, let's bring this down to where it matters most: your daily life. The NFP isn't just for economists or traders. It affects you in four very direct ways: mortgage and loan rates. The Fed raises or cuts interest rates in response to NFP. It directly impacts your mortgage, car loan, and even credit card interest. A strong jobs report today could mean a higher payment on your future home loan. Business hiring and wages. Strong job numbers give companies confidence to hire more workers and even raise salaries to attract talent. Weak numbers can lead to hiring freezes, layoffs, or slower wage growth. Economic confidence. When Americans see job creation rising, they feel secure. They spend more, travel more, and invest in their future. When job numbers are weak, households tighten their budgets, which slows down the entire economy. Your financial security. Behind the statistics are real stories. A new graduate finding their first job, a parent finally landing stable employment, or a family struggling when opportunities dry up. The NFP isn't just numbers on a chart. It reflects the financial health and stability of millions of American families. That's why you should care. Because even if you've never followed financial news, the Non-Farm Payroll Report is already shaping the financial decisions you face every day.
Let's move on to our fifth and last topic: wrap up and strong call to action. So here's the big takeaway. The Non-Farm Payroll Report isn't just another economic release. It's a powerful tool that shows us where the US economy is headed, whether opportunities are growing or shrinking, and how secure American households feel. Wall Street may trade it in seconds, policymakers may debate it for weeks, but for Main Street, it represents something even bigger: opportunity, stability, and security. That's why it matters to all of us. If you found this video valuable, hit that subscribe button and join me here on the Report USA. Every Monday and Friday, we break down the most important financial and economic events shaping America's future. Because the more you understand the economy, the better prepared you'll be for whatever comes next. This is the Report USA. Thanks for watching, and I'll see you in the next report.